right. Well, what is up, Patriots? What is up? Welcome back to Military Money Mondays, the weekly show where we break down proven strategies to help our nation's heroes build lasting wealth, protect what they've earned, and turn their service into legacies for their families. So I'm Dan Farnsworth. I'm a retired naval officer and the owner of Victory X Financial. I founded this agency a couple of years ago, basically just to be able to give back to the community that gave so much to me during my 23 years of active duty service in the United States Navy. It's been an outstanding journey so far. I really appreciate all of the support that we've received, all of the outreach, and I love staying connected to the veteran community and being able to give back and really make an impact for our nation's heroes. So what are we going to be talking about this week? Well, I would say this is probably one of the more important topics, may not be the most exciting topic, but probably one of the most important. We're going to be talking about the Survivor Benefit Plan, or SBP, okay? Now, if you're not familiar with SBP, and a lot of service members aren't, right? This is really only something that kind of affects service members that are coming up on retirement, okay? If you serve, let's say 4 or 5 years and you just simply separate, or if you just separate sometime before the 20-year mark or before you actually retire, the Survivor Benefit Plan really isn't a factor. We would have other strategies and other considerations, but SBP, not so much. So this is specifically for retirees. Now, why is this such an important topic? Well, because SBP is not a voluntary opt-in program, okay? Unlike programs like VGLI, right, the Veterans Group Life Insurance, or any forms of, private life insurance, like what we'll be discussing here, SBP is a joint survivorship annuity program that you are automatically enrolled in, okay? So if you're coming up on retirement and you get your stack of papers, right? You get your retirement papers. If you do not actively opt out of SBP, you are automatically enrolled. And oh, by the way, because it's considered a joint survivorship program, if you are married at the time of your retirement, at the time that you're applying for retirement, your spouse also has to opt out. In fact, your spouse has to sign a notarized statement, okay? You guys that are retired, you know this, right? We have to go through this process. You have to go to a notary and sign a statement saying that you're both opting out of SBP. Or if you don't, you're going to be stuck with it for life. And you say, well, so what? What's the big deal? Why is that such an important consideration? Well, because SBP is going to cost you 6.5% of your entire pension, right? It's going to be taken out of your monthly pension every single month, and it's going to be adjusted based on cost of living adjustments. So as cost of living adjustments go up, you're going to pay more and more and more every single year for SBP, okay? And it's a very rigid program. Like I said, it's the requirements are going to be very stringent. You can only pretty much name your spouse, your existing spouse, as your beneficiary. If you get divorced later or something happens to your spouse later, it's very difficult to reroute your benefits to another person. It's very hard in fact, it's actually impossible to cover children that are past the age of 18 or maybe 22, depending on their dependency status. And basically what it's going to do is it's designed to provide 55% of your existing pension to your spouse if something happens to you in retirement. Okay, so this is a benefit that is designed to basically protect your spouse, okay, so that your spouse is going to receive 55% of your pension for the rest of their life if you pass away first. Now, if they pass away first, guess what? it's gone, right? The benefit is completely gone. Now, if you remarry later, we'll talk a little bit about that. If you remarry later, you can, a lot of times you can kind of reroute that to your current spouse. But divorce cases, a little bit different situation. So just know that if you don't opt out prior to retirement, that you are essentially locked in for life, okay? And you can pretty much take that to the bank, okay? It's very difficult to get the payments stopped after they automatically get started. Okay, so the hidden fine print. So here's the stuff that DFAST doesn't talk about with respect to SBP, okay? So you can only opt out either one before retirement. So when you apply for your benefits, right, you can opt out at that time. And as we go through this presentation, I'm going to show you the reasons why you should consider that, okay, why you should opt out. There are reasons maybe why you shouldn't, okay, and we can talk about those kind of in a separate one-on-one, because they are going to be those onesie-twosie, but for the most part, you should opt out of SBP, okay? But if you don't opt out prior to retirement, you have a small window, okay? It's between years 2 and 3 after you retire. So when you start that second year before the third year, you do have the option to go back and opt out of SBP, and they will cancel and they will stop your premium payments at that point. So they'll stop taking 6.5% of your pension. Okay, now we talked about what happens if your spouse dies first. Well, first of all, if your spouse dies first and you don't remarry, then those benefits are basically gone, okay? All of the premium that you put in, I don't care if you've been paying for 20 years, all of that premium is basically out the window. It's gone, okay? Now, if you do happen to remarry, you can basically file a motion to what they call a new election, right? To have the benefits sort of conferred to your new spouse. Now, the thing is that you have to initiate this, right? There are a lot of retirees, right? And I understand. I mean, it's a very tragic scenario, right? When your spouse passes away before you. Especially if it's unexpected, right? And so there's a grieving process, and kind of the last thing on their mind maybe is to, go in and adjust these benefits because they're just kind of coming out in the background, right? They're not actively making a premium payment every month. It's just kind of being taken out of their paycheck, right? So they might forget, right? And a lot of times it happens. You think, oh, well, that would never happen to me. Well, it does happen, right? They forget to go and basically provide the death certificate to DFAS to prove that their spouse passed away. And if they don't do that within a year, they continue to pay every single year, right? You have 1 year to provide that death certificate to DFAS. Otherwise, they're just going to keep taking that 6.5%, and they're just going to keep adjusting it with cost of living, okay? If you remarry, right, if you happen to get divorced from your spouse, you will need a new election or a court order, okay? And that court order may include former spouse benefits, okay? So folks, we don't like to talk about this stuff, but the fact remains, right? If you get divorced, it could be included in the divorce decree that you have to continue to protect your former spouse under SBP, and that means you're pretty much locked in, okay? And even in that case, you would not be able to transfer the benefit to a new spouse if you were to remarry, if you were being forced by court order to protect your former spouse, okay? And that's all going to be determined by a court, okay, in the divorce proceedings. All right, children age out of the program. So you don't have the option to cover your 35-year-old son or daughter, okay? If, you can cover them if you're a single parent and you have minor children, you do have the option to cover them up to the point that they either turn 18, or if they're in college, they can be covered up to age 22. Okay, but once they hit whatever that magic age is, whether it's 18 or 22, they are no longer eligible to be covered under SBP. And so the benefit basically just goes away, and any premiums that you would have paid in, that 6.5% of your pension, gone. Okay. there's zero flexibility on this, right? So you don't get any refunds if you don't use it. There's no legacy benefit, okay? So in most cases, right, what we've seen historically is that veterans will pay into this program for 30 years, ish, right? And then when they pass away, if they pass away before their spouse, the spouse might receive benefits for a few years, right? But how much is that really, right? How much is 55% of your pension paid out over, let's say 5 years, 6 years, however long the spouse lives, right? And are they going to be able to live comfortably on just 55%, right? That's a real question that you got to ask yourself. Are they able to comfortably live on 55%? Because remember, your pension is only 50%-ish, depending on how long you served, right? If you serve 20 years, it's only 50% of your base pay. So now you're talking about 55% of that your spouse is going to be forced to live on, okay? So those are just some serious considerations, things we want to talk about up front to just kind of give some context as to the fine print of the Survivor Benefit Plan, or SBP. Okay, and before we move on, just want to draw your guys' attention. So the QR code that you see up above is a link to our calendar. If you guys want to book a free strategy call with myself, okay, just go ahead and click on the QR code, or you can go to the direct link. It's going to be Calendly, okay, CALENDLY, calendly.com/victory-x financial. Okay, so calendly.com/victory-x financial, and it will take you directly to our calendar link. You can book a free 30-minute strategies call. Again, no obligations. Even if we don't end up doing business, that's fine. You're absolutely welcome to take my ideas and run with them. My aim is to educate and to inform the veteran community so that you understand how these benefits work and how to maximize those benefits. And like I said, even if we don't do business, that's fine. I'm perfectly happy to have that conversation. So calendly.com/victory-x financial, or just click the QR code above and you can go ahead and book a free 30-minute discovery call. All right, so SBP, why it's costlier than you think. Okay, the premiums aren't fixed, right? They rise each year with cost of living adjustments, just like your pension. Okay, so that 6.5% deduction that's coming out, it gets adjusted every single year. So in a typical 20-year retirement, let's say for someone that retires at pay grade E7, we're going to look at a case study here in just a minute, but somebody that retires as an E7 at 20 years, okay? Over a typical 20-year retirement, that could easily be over $100,000. But in this case, we're going to look specifically at a 20-year period, actually an 18-year period, where that's going to account for about $45,000 to $55,000 out of your pocket. Okay, and those payments basically end when you either die, but not necessarily when your spouse stops needing financial support. Okay, so you're basically paying for coverage assuming that you're going to die first, okay? And if your spouse happens to pass away first, the benefits are basically gone, okay? All right, so let's talk about a case study. So we produced a video this week. If you guys are watching here on YouTube, or even if you're watching on Facebook and you want to check out our YouTube channel, we have a new video out this week that kind of summarizes this stuff. But we do a case study where we talk about a hypothetical retiring service member. So this guy here is Chief Smith. All right, so we'll call him Chief Smith, right? He's a 42-year-old Chief Petty Officer, E7 in the Navy, retiring after 20 years of honorable service. He's looking forward to the next chapter, but he needs to make that critical decision about SBP, right? Because it's that little tiny box on the retirement application, and he's got to make a determination, right? Whether he's going to use this program, go forward, pay the 6.5% to protect his wife, in their retirement. Okay, so his annual pension right? If we just kind of do a basic calculation, his annual pension is going to start out at about $39,000. Okay, again, it's going to be based on 50% of his base pay at the 20-year mark. So if you calculate 6.5% of that, right, we see that the initial SBP cost is going to be about $211 per month. Okay. Now, as cost of living adjustments are made year to year, if we estimate 2% increases every year, which we know it's not 2% every year, but we'll just estimate based on averages, okay? If we estimate 2% a year, by the time he's 15 years into it, he's going to be paying about $278 a month out of his pension that's just going to be going to pay for this death benefit with SBP, okay? So the total over, let's say, an 18-year period is going to be somewhere between $45,000 and $55,000. Again, because we don't know exactly what those incremental increases are going to be year to year, if at all, for cost of living adjustment. Okay, now in this scenario, the reason we bring this up is because this is kind of where SBP, kind of comes into its own. Okay, this is the kind of the typical ideal scenario for SBP. So let's say that Chief Smith, at age 60, he, contracts some cancer or, some kind of a rare illness or whatever, something life-threatening, and he passes away tragically at age 60. Okay. Now, in this case, that's kind of going to be what SBP is designed for, right? Because if his wife is the same age, let's say she's also 60 years old, she probably has another 20 to 25 years of life, maybe more. She might live to be 100. We don't know. But this is going to be kind of the scenario. Is it likely that Chief Smith is going to die when he's 45? Probably not. I mean, that's going to be a pretty rare scenario, low probability. But, at 60 years old, he's kind of starting to get closer to that, age of natural mortality. 60 is still fairly young, but it's more plausible that something could happen and his life could be cut short at age 60. Okay. So in that case, by age 60, if you factor in, again, those 2% cost of living increases every single year, his wife will begin receiving about $21,450 a year before taxes. Okay. Now that's important, right? Before taxes, because this benefit is not a tax exempt benefit. Okay. You are responsible. His wife will be responsible for paying the tax on that 55% of his pension for the rest of her life. Okay. It's going to be recorded as earned income. She's going to have to record it, and she'll get the 1099-R for it at the end of the year, and she'll have to file taxes. So after taxes, because this is a taxable income, depending on what state she lives in, okay, I understand, some states, obviously Florida, Texas, they don't have state income tax, right? But depending on the state that she lives in, if she's paying state tax as well, we're going to estimate that she's only going to receive about $17,000 a year, or roughly about $1,400 a month. Okay, so off of that $21,450 that she's going to receive starting at age 60, she's only going to net about $17,000 of that after tax. Okay. Now, here's another point that I want to bring up. Okay, and this is kind of off the slide topic here for a second, but I also want to talk about turnaround time for these benefits. Okay, so I'll just kind of say this: if you kind of envision, as we do, that, let's say Chief Smith, he passes away at age 60, his wife is 60, let's say it happens in October, right, of that year, that by the end of October, she's going to just start receiving these benefits, okay? So it's going to be this seamless transition. We would love to think that it's just a seamless transition, so that, it would be no different than if he were continuing to receive his pension benefits every single month. Well, I can tell you that is absolutely not the case. Okay. In most cases, right, the overwhelming majority of cases, you're looking at anywhere from 3 to 4 months before these benefits get turned on. And that's assuming right? That is assuming that Chief Smith's wife knows exactly what she's doing, when it comes to filing the claim for the benefits, to liquidate them, right? To basically annuitize the benefits. In most cases, do you think that's what happens, right? Do you think that most veteran spouses are that savvy and know exactly who to call and know exactly what procedures to follow? Do they think about that? Do they kind of pre-rehearse that in our minds? Of course not, right? Of course they don't. Why would they? Right? Why would we sit there and just, and just dwell on that day to day? Well, what happens if my spouse dies tomorrow, Dan? Or who do I need to call and what forms and what paperwork do I? No, most people don't think about that, right? So what ends up happening is they end up delaying the process even more because they take time, obviously, to grieve, right? This is a very tragic scenario and they need time to kind of process and regather their thoughts. And then, once they do, after they've been able to sift through all of the other advice that they're getting and the funeral arrangements and everything else, then they might get around to, actually filing the paperwork to get these benefits turned on. And even then, it's going to take roughly 3 to 4 months before they're going to even see that first check, right? Now, do you think that the mortgage payments are going to stop? Right? Do you think that the car bills, the auto loan bills are going to stop, that the credit card bills are going to stop, that the grocery bills are going to stop during that time? Absolutely not. Absolutely not. So what's going to happen, right? These pension benefits are going to be turned on at some point. But meantime, she could be 2 to 3 months in arrears on the mortgage payment by then, possibly being threatened with foreclosure. Okay, so this is arguably the worst time of her life, right? The worst day, the worst period of her life. And here she is having to worry about her home being taken away, being worried about how she's going to put food on the table because she doesn't have that money coming in during that 3 to 4 month period. Okay, so again, just something to think about. So if she lives to be age 85, okay, she lives to be age 85, so another 25 years. After tax, she's going to receive roughly $425,000. Okay, so he's paid in $50,000. Remember, roughly $45,000 to $55,000 up to this point. Now, he wasn't expecting to die at age 60, so it could have that could have just gone on into another 25 or 30 years worth and been well over $100,000. But in this case, he's paid in about $50,000, and she's going to receive about $425,000 after tax. All right. So we can do better than this. Okay. And every day that we operate this business, we help veterans make better choices that are going to give them more protection, that are going to more adequately and in a superior manner protect their families than what this inflexible government program is basically offering. Okay. And we can do it in a very significant manner, right? We have options that are private options that give you much more flexibility, and we're going to kind of get into those here in the next slides. Okay, so again, just to kind of recap, if Chief Smith, if his wife did happen to pass first, all those premiums vanish. You got the divorce complications, you got remarriage before age 55. That's the other aspect of the remarriage the remarriage part, right? If his wife, if they do get divorced and she remarries before age 55, the benefit stops entirely. Okay. And even if she has a divorce decree that says that he has to protect her, now she loses that protection. Okay. So it becomes very expensive. Okay, so let's talk about the alternative, right? And this is a thematic thing on Military Money Mondays, and it's kind of the main reason why we're here is to talk about not just the doom and gloom, right? It's not just to talk about, well, why are all these government programs so terrible, which they're not, right? But the point of why we're here is to talk about superior alternatives, right? And one in particular, and that is the RETIREMAX ELITE plan, okay? RETIREMAX ELITE is our flagship program that is specifically designed for service members, veterans, and their families, okay? To be able to maximize benefits to be able to create lasting wealth and create legacies for their families converted from their service. Okay, so let's talk about one aspect of that, and that is the RETIREMAX ELITE Protect Plan. Okay, so the RETIREMAX ELITE Protect Plan is one that basically takes roughly that same 6.5% of your pension, and it's going to put it into your own private life insurance strategy. Okay. And so what we do is we basically, instead of putting this money into a government program that's only going to secure a death benefit, we're going to reposition roughly that same 6.5% into a private cash value life insurance strategy. Okay. This is a permanent cash value life insurance strategy that is properly designed and structured to protect the death benefit and to essentially replace this veteran's benefit that's, in my opinion, outdated. Okay, so it's specifically designed for military families who want more flexibility, more control, and more benefit for their investment. Okay, so we're basically trying to achieve the same goal here, right? And we're going to achieve the same goal. We're just going to do it with better execution. Okay, so we're going to allow you to protect your spouse and your family with guaranteed coverage that it also includes tax-free living benefits. Okay, so these type of strategies are going to include living benefits that SBP and frankly VGLI and term insurance and other types of programs that they are not going to include. Okay, so we're going to have a tax-free cash value benefit that's going to be added into that, on top of the additional living benefits that are going to be built into these types of products. Okay, so living benefits, if you were to, God forbid, contract some kind of a chronic or a critical illness or a critical disability, right, that limited you in 2 of the 6 activities of daily living, you're actually going to be able to have additional benefit, right? You're going to be able to advance a significant portion of your death benefit while you're still alive to be able to offset those expenses. SBP, BGLI, they don't do any of that, okay? BGLI, yeah, a little bit, but SBP, forget it, right? SBP doesn't include living benefits, right? If something were to happen to you, and then all of a sudden you're able to start, annuitizing your benefit. That doesn't happen, okay? Again, this is not a government program that you're essentially renting. Okay, you guys realize that, right? If you're paying into SBP, you don't actually own that benefit, right? You're essentially renting it, or you're leasing the benefit, right, during the terms of however long you pay. But this is actually an asset, right? A permanent cash value life insurance policy is an asset that you own and you control the terms of it. It builds value over time. Right? Real cash value, both in the actual cash value and also in the death benefit. Okay. It's an owned asset that's going to increase your net worth over time. All right. It's also designed to build generational wealth. Right? It is designed for you to leave a legacy behind at the end of your life, no matter how long you live. Okay, if you live to be age 120, you're still going to leave a massive death benefit to your family at the end of your life. And that death benefit's going to be guaranteed from day one. Okay, so we don't have to build up to a certain, amount of death benefit. We can increase the death benefit every year. And in many cases we do, depending on the strategy. But when we're talking about RETIREMAX ELITE Protect, we're talking about a level death benefit, right? A $500,000 or more, right? But normally $500,000, because that's what SGLI covers. A $500,000 death benefit that's going to be guaranteed from day one, right? So the minute you make that first monthly premium, you've got $500,000 of coverage that's going to be guaranteed for the rest of your natural life, okay? And at some point, it's actually going to go up, okay, if you live long enough. So it's going to be used to create generational wealth. Okay, and here's basically how it works. Okay, so if we go back to the Chief Smith scenario, right? We said that Chief Smith was going to be starting out at roughly about $211 a month. going up to upwards of 300 by the time he gets to year 20. Okay, so he's going to be basically in it for life, right? And he's going to end up paying in, if he lives to be 85, he's going to be paying in over $100,000. Okay, so keep that in mind, right? He's going to be paying over $100,000 into this policy over the course of his life, and he may never see the benefit. Okay, because again, if his spouse passes away first or something happens and the benefit goes away, they may never see a single dime worth of benefit from this policy. Okay, so what we're going to do instead is we're going to replace that with a RETIREMAX ELITE Protect Plan. Okay, and we can do this before retirement, and we can also do it after retirement. Okay, but obviously the sooner that we do it, the better. Why? Because even if nothing changes with his health before and after retirement, what does change is age. Okay. So he's going to get older, right? Life insurance, when we're talking about underwriting, life insurance, the cost of it is based on age. Okay. It's based on age and health and lifestyle history. Okay. Age being a critical factor that none of us can control. I cannot stop getting older. Neither can you, neither can anybody. Okay. The older we get, the more expensive it's going to become, and the less effective these strategies are going to be. Now, not to say that they're still less effective than SBP, but if you really want to make the most of it, the sooner that you can start this, the better. And really where you're going to get the most benefit from that is that in this strategy here, we're going to only fund this policy for 15 years, right? After 15 years, he's going to have enough cash value in the policy that the policy is going to be self-sustaining after that, right? So he's not going to have to put in any additional premium after year 15. But if he started earlier, right, if he started before the age of 42, let's say he started at age 38, well, not only would he be able to pay the policy up, at a sooner age, but he may not have to make as many premiums because the cost of the insurance is going to be lower in those earlier years, right? So he could start out, in this case, we're going to start out with a $300 a month premium, okay, that we're going to do for 15 years, but he could actually start lower if he's younger, right? Because the cost to insure a 38-year-old is significantly less than a 42-year-old. Okay, that's just reality. That is how the life insurance underwriting process works. It's cheaper to insure when you're younger. So if he starts that earlier, in anticipation of retirement, and that's why we say if you're within 3 years of retiring, reality is you could be within 10 years of retiring. This stuff still applies, okay? Or even if you're not planning to retire at all, right? Even if you're 10 years out and you say, you know what, maybe I'm gonna punch the card in a couple of years at the end of my enlistment. This stuff still applies because you can still take advantage of this, right? It still ends up being a superior alternative to any other forms of coverage because of the way that we design these policies. And again, that gets back to proper structuring of the policy, right? This ain't, your granddad's life insurance, right? This ain't, the Gerber Good Start or whatever they call it, okay? These are properly structured and engineered policies that are designed to protect military families, and they're designed for this specific application. Okay, they're optimized for this application. So when he starts his policy at $300 a month, he's going to get $500,000 of tax-free coverage. Okay, again, tax-free coverage, right? So that $500,000, if God forbid it pays out to his wife at age 60, it's going to be 100% tax-free. She's never going to have to pay tax on that $500,000. Now, the strategy that we're going to talk about here is just one of several strategies that we can use. Depending on her financial situation at the time, we could certainly keep that money tax-free for the rest of her life. But one that we're going to talk about here is going to involve a little bit of taxation, but with a significant benefit in mind, okay? Now, he has the flexibility, again, with this type of a policy to reduce or even pause funding if his financial situation changes. So if he needs to skip months or even years of making premiums for any particular reason, he can just resume after that. And depending on where we are in terms of funding the policy, he could just pick right back up where he left off and continue to fund that so that it's going to still be paid up within that, equivalent of the 15-year period. Okay, with SBP, if you opt out and you miss one premium, it's gone, right? VGLI, same thing. You miss one monthly premium, benefit goes away, not coming back, okay? With the RETIREMAX Elite plan, he also has the choice of beneficiaries. And guess what? He can name multiple beneficiaries all at the same time. So if he wants half of his benefit to go to, his spouse and maybe the other half to go to the kids, or if he wants to name the kids as contingent beneficiaries if something were to happen to his spouse, or if he wants to, he can change the beneficiaries at any time if something happens with the spouse. If she passes first or they do separate, he can easily reallocate those benefits to whomever he wants, including charities, by the way. Okay. So if you're the type of person that says, well, I don't have any beneficiaries, I'm just a lone wolf in this world, and and I don't have anybody to confer this to, well, that's fine. You can still give the money to charity at the end of your life, right? And you can include that, or you can put it in a trust, right? If you want to put it in a trust with other fellow trustees, with specific instructions, right? Specific stipulations on how the money can be used. You can also set that up with your living will, in addition to a trust. Okay, so you can determine how that money can be used. Okay, so again, we go back to the Chief Smith scenario. So let's say he passes away at age 60. Okay, his wife is going to receive $500,000 tax-free. In most cases, it's going to avoid probate, right? Especially with a $500,000 benefit, it's going to avoid probate. Okay, so she's not going to have to wait a year or whatever it takes to be able to get these funds liquidated. Normally, it's within a couple weeks, okay, of her filing the paperwork. She's going to be working with a licensed agent, ideally me, right? So she's going to be working with somebody that understands this stuff, right? SBP, you're not going to have an independent, privately assigned, life agent that's going to be there helping you as an advisor and giving you this information and making sure that you're filing this stuff properly, and that's going to take care of the filing process for you, right? In this case, you do. That's included in that at no additional cost, by the way. Okay, I want to foot stomp that for a second, right? We're going to pound the desk for a second. No additional cost. So you basically have private mentorship in all this, right? We meet at least once a year in these policies, and I keep myself available all the time. Okay, so if you have questions and you want to text them or you want to jump on my calendar, again, that Calendly link is above, right? It's that QR code. If you have questions or you want additional information on this, you just jump on my calendar and we'll have a meeting, or we can have a phone call, or you can text me and I'll answer the questions. So you have private oversight in this entire process for the rest of your life, guaranteed. Okay, that is guaranteed. It comes at no additional cost. Okay, you don't get that with SBP. So in her case, we're gonna file the paperwork. She's gonna have that $500,000 check in hand, no taxes, no income tax, no estate tax. Right? It's just going to be $500,000 in hand within a few weeks. And we then have the option to roll those funds into a private pension or a hybrid pension strategy. Okay. And this is also part of the RETIREMAX Elite Protect program. Okay. We have the ability to roll those funds into a hybrid pension strategy that is then going to pay her an annual salary, I guess you could say, or an annual benefit for the rest of her natural life, no matter how long she lives. Okay. And in this case, because of the current premium bonuses that are offered, and because of the roll-up rates, the guaranteed roll-up rates that are offered in our hybrid pension strategies, she's going to start receiving $36,000 per year guaranteed for the rest of her life. Okay, so I'll say that again. She's going to get $500,000 tax-free. We're going to roll that into a hybrid pension strategy, right? So a self-funded pension strategy that is going to give her $36,000 a year, and she's going to be able to turn that on immediately. Okay, as soon as the premium is transferred in, usually takes less than a month. Okay. In this entire process, she's going to be able to turn on monthly payments to the tune of $36,000 a year, and that's going to continue for the rest of her life, no matter how long she lives. Okay, so what does that basically equate to? Well, if she's receiving $36,000 a year and she lives to be 85 years old, after taxes, right? Because we did say that there is going to be some taxable component to this, right? Because we're basically rolling this into a taxable strategy. Okay, so she's only going to be responsible for paying tax on the capital gains because this is coming in with after-tax dollars, right? This is not tax-deferred money, so she's not going to be responsible for taxes on the initial principal, but she will be responsible for a minuscule amount of tax on the overall gains. So at a minimum, right, if she lives to be 85 years old, at a minimum, she's going to receive somewhere between $720,000 to $900,000 of benefit. Okay, and again, you go back and you compare that with SBP, right? SBP was $425,000 a year. I'm sorry, $425,000 total, right? $425,000 total after tax. With this, somewhere between $720,000 and probably close to $900,000 of total benefit if she lives to be 85. If she lives longer than that, guess what? That number just keeps going up. Okay. So again, when we're looking at the side-by-side comparison, again, we say Chief Smith put in $45,000 to $55,000 in SBP. Okay. The amount was rising every year. He couldn't anticipate that he was going to pass away at age 60. So he could have been paying a lot more, right? He could have been putting in over $100,000. His wife is going to receive $21,450 a year. It's going to be taxable, so she's going to net over 25 years about $425,000, assuming she lives to be 85. Okay, and he can only provide that to her. He can't provide it to anybody else. Okay, if she remarries before the age of 55, which in this case, obviously she was over 60, but if she were younger and she remarried before 55, there's a good chance that benefit's going to stop, right? Depending on how a court order were to basically, or an election process were to play out. But with RETIREMAX Elite Protect, he's going to put in $300 a month fixed, right, for 15 years. So a total of $54,000. He's going to have a guaranteed $500,000 death benefit from day one. Okay, he doesn't have to wait to try and receive that or build that up. It's going to be guaranteed from day one. And if he passes at age 60, his wife is going to receive $500,000 tax-free. We roll that over into a hybrid pension account, which is annuitized every single year, and she's going to receive roughly $720,000 to upwards of $900,000 of benefit if she lives to be 85. Okay, and again, if she lives longer than that, she's going to get more than that. Okay, because it's just going to continue for as long as she lives, no matter how long she lives, and no matter what the markets do in the future. Okay, so if you were just to simply roll this money into, let's say, an IRA or a Roth IRA or whatever, then you're still, or a mutual fund portfolio, right, for that matter, or stocks or even real estate, you're still at the mercy of whatever those markets are going to do, right? If she were to just simply use the money to pay off her house, I mean, yeah, that's going to save you on the mortgage, but is your house guaranteed to appreciate in value every single month or every single year? Absolutely not. It could take a dive, right? And then you could have ended up just wasting that money, right? If the market drops and you end up making less on the house, then you just essentially wasted that money. Here, we're going to guarantee that money is going to grow every single year, and it's going to yield a much higher benefit than SBP would have yielded, right, if she had just simply taken that, and literally to the tune of double the benefit. Okay, in fact, in this case, probably a little bit more, right? 17,000. I mean, 36. You're going to have a little bit of tax coming off of that, but basically double the benefit. Okay, by using a privatized strategy as opposed to using the government plan, SBP. Okay, so both options protect your spouse, right? I want to punctuate that. Both options are going to be valid for protecting your spouse, but only one of them is going to build wealth. The other one is just going to build dependency. Okay, because the further and further you get along, the more dependent you are on this program by default, because now that money has already left your household, right? If he's put in $55,000 into SBP, he's never get that money back, right? So now you have $55,000 worth of dependency into SBP as opposed to $55,000 of actual cash value in your own private strategy. Okay, so this process, this program is going to build wealth. It's not going to build dependency. Okay, it's going to pay more than SBP. It's going to be taxed less, and it's going to continue as long as you and or your spouse are alive. Okay, and in the case of an annuitization, we're going to ensure that the principal continues to grow every year, that it's protected by contractual guarantees, and she's going to receive a contractually guaranteed benefit for the rest of her life, regardless of how long she lives. And in some cases, we can actually do more. We can add period certain on there, meaning that, if she were to, let's say, pass away within those first 10 years, that the benefit would continue to be paid out to the kids. And we can also do all kinds of things with that $500,000 too, right? We can allocate that. We don't have to necessarily put the full $500,000 into an annual, benefit, right? We could take $100,000 of that, and we could, if let's say the house did have $100,000 left on the mortgage, right? We could take $100,000 and we could pay the mortgage off. We could take that other $400,000 and roll that into the annual benefit, right? She's obviously going to get less than $36,000, but maybe she doesn't need the full $36,000 if she's got no mortgage, right? So $100,000 pays off the house. Maybe we end up with $27,000 or $28,000 a year after that before tax. Again, minimal tax on the capital gains from the principal every year. But she's going to receive that every single year, and she might be completely debt-free at that point. Wouldn't that be something, right? That would become the legacy that Chief Smith had in mind when he was signing up for SBP, and I bet it would be for you too. Okay, I'm gonna stake my claim on that. I'm gonna lay my money down on the table that if you were the type of person that's considering SBP, that's the scenario you're envisioning. Unfortunately, that's not the package that you're getting with SBP, right? But that's the package that you're going to get with RETIREMAX Elite Protect. That's the package that we're going to give you, the honorable veteran, that you deserve in return for your sacrifice and your service, right? That's what you've earned. You've earned that ideal sense of protection for your family, right? You've earned that ideal concept, and that's what you're going to get with this. You're not going to get that with SBP. So again, just to kind of recap, why veterans choose the swap, right? The swap for SBP, which is the RETIREMAX Elite Plan. And we help a lot of veterans with this, okay? We've helped numerous veterans before they've gone down these rabbit holes of paying in tens of thousands, if not over $100,000 into programs like this that I won't call them worthless, but they're just not great, okay? They're sufficient, they suffice, but they're not great. Okay, and we've helped numerous veterans replace these programs with ones that truly build value, right, that are tax-free or have minimal taxes, right, as opposed to being maximal taxes, that have flexibility in assigning beneficiaries, that have guaranteed lifetime income, right, and that build generational wealth. Right? SBP was not designed to build generational wealth. It was designed to just throw some crumbs to your spouse, if you were to pass away first. It's not designed to help, your family become prosperous for generations. These strategies do that. Okay. Now, the one example, like I said, that we just posted there, is one that would be more focused on maximizing income for your spouse. But again, we can take portions of that death benefit and we can create lasting legacies that are going to continue for your kids, your grandkids, your great-grandkids, et cetera, right? How would you like that, right, in comparison to SBP? How would you like for your grandkids to be able to benefit from your service? Most veterans would say they would want that, okay? And if you don't, that's fine too, at least your spouse is going to have double the benefit that you would get with SBP, right? So to me, this is kind of a no-brainer, right? And if you're within that 2 to 3 year window, let's say you did take the SBP because you didn't know what you didn't know, that's okay, right? If you're within that window and you're sitting here and you just retired a couple of years ago and you're coming up on that 3 year window, now is the time to act. Okay. And there are some things we can even do, right? There are some rare exceptions, and we can kind of help you navigate. Again, click that calendar link above, schedule your free generational or your free veterans wealth discovery call. And we can talk about some of those other strategies that we can use where we can try to, get some exceptions. Okay. We've navigated these waters before. We've researched this, thoroughly researched SBP. Okay, I would consider myself to be a resident expert on SBP, and we have helped veterans to, get out of these benefits. But it's very difficult if they're beyond that 3 year mark. Okay, so if you're coming up on retirement or you're within that 2 to 3 year mark, now is the time to act. And we can get these benefits replaced very easily and very quickly. Okay, and they're going to be ones that last for the rest of your life. So again, you've spent a career protecting others. Let's protect your legacy with this, okay? You've served your country with honor, right? You've protected the freedoms of others. You've defended values. You've sacrificed your time, right? So now we're focused on protecting the people that you love, right? We're focused on protecting your family with these type of strategies. And we do that very, very effectively, and we do it very simply. Okay, these processes, while they can be very complex and very complicated on the back end, we keep them as simple as we possibly can so that you understand every step of the way, right? And you understand how these systems and how these programs work, and you can take advantage of it without having to become an expert in permanent cash value life insurance. Okay, we've already done all the homework. I've done all the homework so that you don't have to. And you can just benefit from these programs and know that you're getting a much, much more superior benefit to what you're otherwise getting with SBP. Okay. So again, that's our topic for this week. If you guys have any questions, all right, go ahead and post them in the comments below. I'll hang back for a few minutes. If you guys have questions, I'm happy to answer those questions. And also, just because you stayed till the very end, as an added bonus, right? Because I love you guys, and I want to give you as much as I possibly can at no charge whatsoever. If you comment wealth in the comments section below, don't care if you're watching on YouTube, if you're live on Instagram, if you're live on Facebook, if you comment wealth, right, wealth in the comment section below, I'm going to send you a free copy of RETIREMAX Elite. Okay, this is our published book. It's on Amazon. You can even see it's got a little ISBN on there. It's legit. Okay. RETIREMAX Elite. It's a fairly simple, quick read. It's about 110 pages. Okay, where we talk about these strategies and we talk about how we help veterans and sort of the the history that went into building these strategies and why we do this. Okay, this is your guidebook. Okay, this is not everything, but this is your guidebook, and I want to send you guys a free copy. And I tell you what, I will even pay for the shipping. Okay, I normally don't offer that through the week. If folks want a free copy, I'm happy to send it, but I normally request that folks pay the shipping and handling just so they have a little bit of skin in the game. But today, right, because it's Military Money Mondays, if you comment wealth in the comment section below, I'm going to send you our free RETIREMAX Elite guide. This is the Veteran's Guide to Tax-Free Wealth and Financial Freedom, and I will even pay for the shipping. Okay, so there you go. That's your free bonus for the day. If you guys have any other questions, like I said, post them in the comments below. I promise I will answer every single one of them. And I wish you guys a great week. If there are other topics that you want us to explore in future episodes, please feel free to put that in the comments as well, or DM me, right? If you want to send me a message on Facebook, if you want to text me at our business number, that number is linked on the victoryxfinancial.com website. You can go there and actually just send me a text message. I promise I respond to every one of them, right? If you guys want to see specific topics, discussed, whether it's here on Military Money Mondays or even in our free Facebook group, right, the Victory X group on Facebook, just put those in the comments and we will answer those questions, and we will build future topics that address those questions, okay? Because I want to hear from you. I want to know, what are those burning questions that veterans want to know, right? I can only think of so much on my own, so I need your guys' help. You tell me, what do you guys want to talk about on future episodes of Military Money Mondays? So until then, I will sign off for this week. Again, I'm Dan Farnsworth, retired Navy officer, owner of Victory X Financial, wishing you all a very, very happy week, happy Monday, and we'll see you again on next week's episode of Military Money Mondays. Stay sharp, stay ready. We'll see you.
It's your thing. Do what you want to do. I can't tell you